as of now up to 2.25%. That decision just coming in literally just a minute or two ago. It is a bit, if I'm being honest with you, of a surprise. A lot of people had expected the bank to go even further than that, to raise interest rates by 0.75%. So going up by half of a percentage point, it's certainly big. You know, it's equal to the biggest they've done before, which was in August and a few times in the 1990s. It takes it up to the highest level that we've seen since, I think, 2008. But even so, it's not going as far as many people had expected. And I just wonder whether that's something that will raise question marks, both in government. So obviously we've had Liz Truss and Kwasi Kwarteng asking questions about whether the Bank of England is doing enough to clamp down on inflation. And that really is the backdrop for all of this, remember. Inflation currently at 9.9%, but expected to go even higher in the coming months. But also, when you look at what's happening in markets right now, when you look at the strength of the pound, and, you know, this is an institution which is the home of the pound. It is basically their job to keep the pound as stable as possible. Well, I should say they're not really targeting currencies, but they are kind of, you know, in control of the pound. When you have the pound falling as much as it has done recently, that has raised more than eyebrows here in Threadneedle Street. So the fact that they haven't raised interest rates quite as much as expected, you've got to look at currency markets and potentially see an impact from that. In terms of the background to the decision, it was a 5-4 decision. They've got 9 members on the Monetary Policy Committee. 5 of them voted to raise interest rates by 0.5%. So it was a split decision. It was a close decision. It could well have been more, but it's worth just saying, you know, a lot of people expected the bank to go further than even this. The big picture here, though, is on the other side of town, here in London, on the other side in Westminster, you have the government committing to very big increases in spending, in borrowing. And when that happens, all else equal, that's the kind of thing that forces the Bank of England or whoever's setting interest rates to push them higher. And that's basically what's happening. Only a few months ago, the expectation in markets was that interest rates were only going to get up to about kind of 2.25%, where they are as of now. Now, when you look at what people are betting on, they expect interest rates to get all the way up to 4.75%, so nearly 5%. So this is big stuff. It is a major shift on where we were only a few months ago. Part of it is down to high inflation. Part of it is down to the government spending a lot more money, and obviously we'll learn how much more money potentially tomorrow, at least what the extra measures are going to be. And as a result of that, the Bank of England is taking action. But as I say, not quite as much action, not quite as dramatic as some had expected. 0.5% increase, very big by recent historical standards, but not quite as far as many people in the markets might have expected.
And Ed, my understanding is they're not meeting next month, so this has now got to tide us over a 2-month period. When they do next meet, does that suggest then that it could go up again quite quickly at the next meeting?
It could well do. I mean, remember, what tends to happen is that they don't have a meeting every single month at the moment. They have meetings, some of which happen, like today, without producing a set of new forecasts. So we've got some signals on what they expect to happen with the economy, but we don't have a full new forecast. Some of them do. And that next meeting in November is going to be with a full forecast. And the broad expectation is you're going to see another big increase in interest rates. Then, as I say, when you look at what people, traders in the market are expecting, they're expecting rates to get up to 4.75%. And I know that's not big by historical standards, but given that we have a higher debt load at the moment, given that people's earnings in comparison to their house prices and to their mortgages are lower than they were in many previous years, that is really very high. It's about the highest level that we've seen before a few of the last recent house price crashes. So this is serious, and it is going up very fast, and part of that is because inflation is very high right now. Like I say, part of it is because when the government spends more money, when it borrows more, all else equal, you would expect an institution like the Bank of England to raise interest rates, and that is what they're doing.